Hello viewers, I Muhammad Abdul Habib welcome you all to our application AIMS tutorial. In this video, we'll be discussing the chapter recording of business transactions journal entries. Let us have a problem. Page number 62, question number 3. In this video, we'll be discussing all the transactions individually, and at the end of the video, we'll see how our solution should appear. Here is the question, page number 62, question number 3. Generalize the following transactions in books of Mr. Akbar. The transactions are given for the year 2019 for the month of March. The first transaction is given on March 1. Akbar started business with cash 50,000. So the heading will be taken as general entries in books of Mr. Akbar, and the format for general entries will be date, particulars, LF, which stands for ledger folio, debit amount rupees, credit amount rupees. The date will be taken as 2019 March 1. As Akbar has started business, cash is coming into the business, so cash will be debited, cash account debit 50,000. The investment done by the owner into the business is called as capital. So it will be recorded as to capital account 50,000, and the narration will be being business started. Coming to the next transaction, which is on 2019 March 2nd, cash sales 30,000. So here the date will be taken as 2019 March 2nd, cash sales. It means the business is selling the goods. So sales is an income. So sales will be created, and in return the business is receiving cash. So cash is coming into the business. So cash will be debited, and the journal entry becomes cash account debit 30,000 to sales account 30,000, and the narration will be being goods sold for cash. Coming to the next transaction, which is on 2019 March 4. Cash purchases 40,000. So here the date will be taken as 2019 March 4. Purchases, it is an expenditure to the business, so it will be debited, and as cash is going from the business, it will be recorded on credit side, and the journal entry becomes purchases account debit 40,000 to cash account 40,000, and the narration will be being goods purchased for cash. Coming to the next transaction, which is on 2019 March 6, sold goods to Mahesh 35,000. The date will be taken as 2019 March 6. Sales, it is an income to the business, so sales will be credited, and the goods are being sold to Mahesh. Mahesh is the receiver of the goods, so it is a credit transaction, and the name of Mahesh will be recorded on debit side. How to identify whether a transaction is credit transaction? When the business is purchasing goods or the business is selling goods and the name of a person is specified, it becomes credit transaction. So this time the business is selling goods and the name of a person Mahesh is specified, so it is a credit transaction. So as Mahesh is the receiver of the goods, his name will be debited, and as sales is an income to the business, sales will be credited, and the journal entry becomes Mahesh account debit 35,000 to sales account 35,000, and the narration will be being goods sold to Mahesh. Coming to the next transaction, which is on 2019 March 9, bought goods from Radhika 25,000. The date will be taken as 2019 March 9. Bought means we are purchasing goods. The business is purchasing goods. So as purchases is an expenditure, purchases will be debited as purchases account debit 25,000. As the goods are being purchased from Radhika, Radhika is the giver of the goods. Once again, it is a credit transaction, and the name of the Radhika will be credited. So the journal entry becomes purchases account debit 25,000 to Radhika account 25,000, and the narration will be being goods purchased from Radhika. Coming to the next transaction, which is on 2019 March 11, sold goods to Swati for cash 10,000 rupees. So here the date will be taken as 2019 March 11. Sales, as it is an income, it will be recorded on credit side. So in this transaction, the business is selling goods and the name of a person Swati is also specified, but continuation it is given as for cash. So earlier we discussed that when the business is purchasing goods or the business is selling goods and the name of a person is specified, it becomes a credit transaction. So this time the business is selling goods, also the name of a person is specified, but along with the name of a person, it is also given as for cash. It means that the business is selling the goods to Swati, but in return the business is also accepting cash from Swati. So it is not a credit transaction, it is a cash transaction. So if for cash was not specified in this transaction, we would have recorded the journal entry as Swati account debit to sales account. But as for cash is specified, as it is a cash transaction, we are going to ignore the name and we are going to consider as it is a cash transaction. So we'll be writing it as cash. So the journal entry will be cash account debit 10,000 to sales account 10,000, and the narration will be being goods sold to Swati for cash. Coming to our next transaction, which is on 2019 March 15, Mahesh returned goods. So the date will be taken as 2019 March 15. So when we have sold goods to Mahesh, it was recorded as Mahesh account debit to sales. This time Mahesh is returning goods. So Sales was an income, it was recorded on credit side. Now this is a transaction of sales return. This will be decrease in income, so it will be sales will be reduced by writing it on debit side as sales returns. And as Mahesh is the giver of the goods, so the name of Mahesh will be credited and the general entry becomes sales returns account debit 5,000 to Mahesh account 5,000, and the narration will be being goods returned by Mahesh. Coming to the next transaction, which is on 2019 March 18. Commission received 1,000 rupees. So here the date will be taken as 2019 March 18. Commission received in the sense cash is coming into the business. So cash will be debited and the name of the income will be credited. The cash is being received in the name of commission. So commission is an income. So it will be created as cash account debit 1,000 to commission account 1,000, and the narration will be being commission received. Coming to the next transaction, which is on 2019 March 19. Office expenses paid 500 rupees. So here the date will be taken as 2019 March 19. Office expenses, as it is an expenditure, it will be recorded on debit side, and as cash is going from the business, cash will be recorded on credit side, and the general entry becomes office expenses account debit 500 to cash account 500, and the narration will be being office expenses paid. Coming to the next transaction, which is on 2019 March 20. Cash paid to promote 6,000 rupees. So here the date will be taken as 2019 March 20. As the business is paying cash, cash is going from the business, so cash will be credited, and the business is paying cash to Pramod. So Pramod is the receiver of the amount, so his name will be debited, and the general entry becomes Pramod account debit 6,000 to cash account 6,000, and the narration will be being cash paid to Pramod. Coming to the next transaction, which is on 2019 March 22. Return goods to Radhika 2,000 rupees. So here the date will be taken as 2019 March 22. In a previous transaction, we have purchased goods from Radhika. It was given as bought goods from Radhika. So we have recorded the journal entry as purchases account debit to Radhika account. This time we are returning goods to Radhika. So it is decrease in expenditure. So in order to reduce purchases, we'll be writing it on credit side as purchase returns. When we purchase goods, it was an expenditure. It was recorded as purchases. Now when we are returning goods, it is decrease in expenditure. So purchase returns will be recorded on credit side. And as Radhika is the receiver of the goods, the name of Radhika will be debited, and the general entry becomes Radhika account debit 2,000 to purchase returns account 2,000, and the narration will be being goods returned to Radhika. Coming to the next transaction, which is on 2019 March 25. Goods withdrawn for domestic use 5,000 rupees. So here the date will be taken as 2019 March 25. Owner of the business can withdraw either cash from the business or goods from his business for his personal use. If the owner has withdrawn cash or if the owner has withdrawn goods from his business for personal use, it will be termed as drawings. The only difference is if he is withdrawing cash, the general entry will be drawings account debit to cash, and if he is withdrawing cash from bank, the general entry will be drawings account debit to bank, and if he is withdrawing goods from his business for personal use, the general entry will be drawings account debit to purchases. I repeat, if the owner is withdrawing cash for personal use, the general entry will be drawings account debit to cash. If the owner is withdrawing cash from bank for personal use, the general entry will be drawings account debit to bank. If the owner is withdrawing goods from the business for personal use, it will be recorded as drawings account debit to purchases. So purchases, it is an expenditure. It will always be recorded on debit side. But this time, as the owner has withdrawn goods, in order to reduce the expenditure, purchases will be recorded on credit side, because the goods are purchased in the business to sell to customers, not to use for personal purpose. So as the goods, instead of selling the goods, as the goods are being utilized by the owner himself, in order to reduce purchases, it is recorded on credit side. So the general entry becomes drawings account debit 5,000 to purchases account 5,000, and the narration will be being goods withdrawn for domestic use. Coming to the next transaction, which is on 2019 March 27. Cash received from Anand 3,800 and discount allowed 200 rupees. So here the date will be taken as 2019 March 27. Cash received from Anand means we are receiving cash. The business is receiving cash, so cash is coming into the business. Cash will be debited as cash account debit. How much cash we are receiving? 3,800. So it will be recorded as 3,800. And we are receiving the amount from Anand. So Anand is the giver of the amount. So name of Anand will be credited as to Anand account. And discount allowed. We are allowing him discount of 200 rupees. So discount, it is as per the rules of nominal account, debit all expenses and losses. So this time, as we are allowing discount, it is a loss to the business, so discount will be debited. So the general entry becomes cash account debit 3,800, discount account debit 200, to Anand account 4,000. 3,800 plus 200, it becomes 4,000. It means that we were supposed to receive an amount of 4,000 from Anand, out of which we are receiving a cash amount of 3,800, and we are allowing him a discount amount of 200 rupees. The narration will be being cash received from Anand and discount allowed. Coming to our next transaction, which is on 2019 March 28. Interest received 500 100 rupees. So here the date will be taken as 2019 March 28. We are receiving cash. So cash is coming into the business. So cash will be debited. And the name of the income will be created. The income is interest. So it will be created as to interest account. So the general entry becomes cash account debit to interest account 500, 500. And the narration will be being interest received. Coming to the next transaction, which is on 2019 March 29. Cash paid to Raman 4,900 and discount allowed by him 100 rupees. So here the date will be taken as 2019 March 29. Cash paid to Raman means we are paying cash. The business is paying cash. So cash is going from the business. So cash will be created. And as Raman is the receiver of cash, so the name of Raman will be debited. So the general entry becomes Raman account debit to cash account. How much cash we are paying? 4,900. So it will be recorded as 4,900. Discount allowed by him 100 rupees. It means that Raman is allowing discount to business of 100 rupees. So this time business is receiving discount. So as per rules of nominal account, this time it is a gain, and as per the rules of nominal account, credit all incomes and gains. So discount will be credited. So the general entry becomes Raman account debit to cash account 4,900 to discount account 100. 4,900 per 100, 4,900 plus 100, it becomes 5,000. So the general entry will be Raman account debit 5,000 to cash account 4,900 to discount account 100. It means that we were supposed to pay an amount of 5,000 to Mr. Raman, out of which we are paying 4,900 to Raman in cash, and we are getting a discount amount of 100 rupees. And the narration will be being cash paid to Raman and discount received. Coming to the next transaction, which is on 2019 March 31st. Commission paid 300 rupees. So the date will be taken as 2019 March 31st. Commission, as it is an expenditure, it will be recorded on debit side. And as the business is paying cash, cash is going from the business. So cash will be recorded on credit side. So the general entry becomes commission account debit 300 to cash account 300, and the narration will be being commission paid. So this was the last transaction for this problem. Now let us see how the solution should appear. The heading will be taken as journal entries in books of Akbar. Here is the format for journal entries: date, particulars, LF, which stands for ledger folio, debit amount rupees, credit amount rupees. He has started the business on 2019 March 1st. The first journal entry was cash account debit 50,000 to capital account 50,000, and the narration was being business started, followed by the subsequent journal entries. So this is how our solution should appear. So here in this transaction March 11, instead of Swati account debit to sales, we have to write it as cash account debit to sales. So here instead of writing it as Swati account debit to sales, we need to write it as cash account debit to sales. So this is how our solution should appear. Hope you have understood the topic. See you all in next video. Thank you.